Hello, everyone. It's Tim Davis coming to you guys with another informational and educational video. This video, I'm going to be recording for you guys um, just as a way to help you navigate through a downward trending market. But this doesn't only help you in this type of situation, but it helps you in any type of trending market once you spot a trending channel or a trending downtrend, how to navigate through that trending downtrend or that trending channel to maximize your profits. So since the market is in a overall bear market, I am going to help you guys navigate through this bear market because there can be a lot of volatility when you're speaking of a bear market. So a lot of folks have sometimes struggle as to if we're still in this bear market, if we about to have a quick snapback, we're about to have a quick bear market rally, when and where to enter positions. So I'm going to show you some ways to help try to navigate through these quick changing short-term trends as we navigate through an overall downward trending spiral or an uptrending spiral. But because we're in an overall bear market, I'm going to show you guys how to apply this to a downward trending market. All right, I'm going to start off. I'm going to take a look at all these major indices. We're going to take a look at the S&P. We'll take a look at the Dow Jones. We'll take a look at the NASDAQ, the Russell, and then we're going to glance at the VIX. And then I am going to show you guys a trade that could potentially be extremely profitable over the next week or so. I'm using this type of strategy, or just a sector to pay attention to in general. At the end of this, I'm going to give you guys a quick overview of again my expectations for this market over the next year or so, and take a look at these channels and show you how you can almost depict possible potential direction or changes in the overall market environment or stock that you're trading, if you understand how to trade the trend. All right, so here's a look at the S&P 500. And what you'll see here is pretty much a pretty clean chart. And all you're going to see here is a Fibonacci tracement tool that I've drawn along with trend lines. Okay, so when there is a pivot in the market, when I see a change in market direction overall, this is a weekly chart. I love to pay attention to the weekly charts to determine if there's a major change occurring or about to happen within the overall market. So we got that sign in the overall markets, probably, let's see, oops, I need this tool again. So beginning of this year, this is the S&P, kind of like hit a pivot point that was established earlier in the year. And since then, you see, we have started to trend downward. And if you notice, what I did was able to establish a upper trend channel, upper trend line eventually, and a lower trend line eventually. And what that shows you is that the overall market is pretty much range bound within this channel. Not really range bound, but pretty much in a trading within this channel. So price action has a tendency to hit the bottom of the channel, and then trade to the top of the channel, and then back to the bottom of the channel, then eventually back to the upper part of the channel, and then to the lower part of the channel again, and then head back up towards the top of the channel. Now, sometimes we don't always make it back up to the top or to the bottom. Okay, and this overall trend, downward trend, goes in like a diagonal, diagonal formation. So It's a diagonal pattern. All right, so you have the diagonal trends that form within this downward trending direction of the market. So I have a resistance and support level that I like to establish with this diagonal trending direction. So I got an upper trend line and a lower trend line, which helps me navigate through this diagonal channel that we see forming here. Now, sometimes we don't always make it back up to the top of that particular channel. That's where my Fibonacci tool comes in and helps me establish possible areas of where we can see possible horizontal support resistance come into play. So we got a diagonal overall direction of this channel, which is trending downward. So more than likely, so normally when you see channels, when you see a trend line start to form, trends can either go from upper left to lower right, as we see here in this downward trending channel, or from lower left to upper right. So again, downward trending channel, you'll normally see price action traveling in a range from upper left to lower right. And uptrend, you normally see it, the trend trending from lower left to upper right. All right, so we'll play that. So again, the downward trending channel right now, we see it is trending from upper left to lower right. That establishes this downward trending channel. Now, and sometimes, again, you don't always come back up to the very top of that channel before price action starts to trend downward, and vice versa. Sometimes, we don't go all the way up. Come all the way back down to the bottom of the channel now as we stop. So Fibonacci comes into play to help you establish some horizontal levels of support resistance. So once I established that there was a change in direction in this overall trend, and now we are trending downward. So I was able to draw a trend line, or a Fibonacci tool, all the way back, starting back to the COVID lows. So when we hit this COVID low, price action started trending higher. So that established a new uptrend. So what I pretty much did was draw a Fibonacci tool from that pandemic low all the way up to the high that we seen back, up in beginning of 2022. Okay, that gives me a range. Okay, Fibonacci will help give you possible levels of support resistance that you can also pay attention to as price action starts to trend downward. So sometimes, again, we don't come all the way back up to the top of the horizontal trend lines. Sometimes we might start to establish some support right around these fib levels, like here and like here. And then we might not go back up to the top of the channel, like here. Notice for those levels that I just circled, they are right at a Fibonacci level. So this first level, which is 23.6, we see price action traded down to that 23.6. Actually traded down toward here too. And that was right at the horizontal level of resistance as well, level of support as well. And we marched up, didn't quite get to the top portion of this trend line until we started to reverse again. And we established a strong level of support right at that Fibonacci retracement level, also right at that level of horizontal support. Then price action traveled higher, back up to the top of the horizontal trend line, all the way back down through this Fibonacci level, and then caught some support right at the horizontal support level And I'm sorry, yeah, right at the horizontal Fibonacci level, which is at the 38.2%, and right at the diagonal level of support for our downward trending trend line. So Fibonacci shoulders gives you some added layers of support resistance to help you navigate through this overall trending market. Now, let me switch to a daily chart, and you can see it even more clearer here. So on this daily chart, you'll see as we hit this Fibonacci retracement area right here, around this 23.6, it also comes in line right along with this downward trending trend line. We met it right here. We met it right here. Just about the same level. Then price action went higher up to the horizontal upper band portion of that downward trending channel, and then back down right through this Fibonacci level, this time back down to the lower portion. So again, it pretty much just gives you a sense of possible support resistance where you can either add to your position or take profits. Until this overall horizontal downward trending channel changes, we will continue to stay in an overall downward motion in this bear market. Okay, in order for this bear market to change, what we need to see is a break above that horizontal downward trending channel. Upper portion of that channel, we need to see a clear breakout in a big way. Now, if we look at a monthly chart, does not look like we're even close to seeing it happen. Monthly chart, you see it's even tighter. So we're just stuck in this downward trending channel until we get a clear breakout and price action does this. Then we can say, okay, we're in a, you know, the downward momentum has changed. We are possibly heading back into a bull market. But until price action breaks out of this downward trending channel, we are still in this bear market, folks. Okay. All right. So trading these channels is a good way to take advantage of maximizing your profits. When you see price action travel back up towards the top of this channel and actually hits the top of the channel, that's the ultimate place where you could put on a bearish bet to trade this back down to the bottom of the channel and possibly right at a fib level. Okay, as you can see here, we had multiple red weeks in a row. 1, 2, 3, 4, 5, 6, 7. Until you see there was a move happening here. It's this long wick here. Then we had another red candle. Then we started to march back up to the other side, but only back up to this 23.6 fib level right here. Then we started to reverse again. So more than likely, we'll probably continue to go lower and maybe even break that back down through this fib level since we tested it here and couldn't break it, probably break back down through it and possibly test the bottom of this channel. And then in the future, this is on the S&P 500. So I can look at either one of these indexes. And you can use this, you can draw these trend lines and use this Fibonacci level, Fibonacci retracement tool on any of these indexes or any stock for that matter to help you set up this horizontal support resistance and diagonal support resistance with the Fibonacci retracement levels. Okay, so overall, like I said, we in this downward trending channel, and normally at the top of the channel, normally we end up going lower, and then we get that back down to the bottom of the channel, and we'll establish some support and trend higher. Sometimes we don't always reach the bottom of that channel. Sometimes we don't always reach to the top of the channel. That's when these Fibonacci horizontal lines will come into play. All right. And again, like I said, we look at each one of these indices. Here's a NASDAQ. Same type of scenario. Still looks the same. Now the NASDAQ has been coming short of dropping all the way back down to the bottom of the channel. It's been trading within this channel halfway down and then back up till we got here, then come all the way back down to the bottom of this channel. So this is a good place to where you can see sharp support being found on these long wicks right there at that 38.2 Fibonacci retracement level back in February. Hit that level, a real quick snap back, only back up to the top of that 23.6 retracement level, then another pullback, back down to this level, fib level again, and then back up to the top of the channel finally. Then a sharp move down all the way back down to the bottom of the channel from March. That was from March to about May. And we got a little snapback rally, and look where we're to, only up to this 38.2% Fibonacci retracement level, and then like we got this solid red candle here, which to me is put more emphasis on a possible continuation as we head into the next trading cycle on this. I think this is weekly candle. So we'll probably head right back down to make another test and then head back up somewhere and maybe find some resistance right around here before we zigzag back down. So that's a way that you can put the Fibonacci retracement tool along with your horizontal, along with your diagonal trend lines to help you establish some support resistance. All right. All right, taking a look at the Russell. Again, it's like textbook, folks. Establish your channel, your diagonal channel, and then draw your fib tool to help you find areas of support resistance where you can enter a trade or exit a trade. And this is a perfect stair-step formation in this Russell on this weekly chart. Can't get no better than that. Look at that. You can't get any better. So that's how a downward trending channel looks. And if we was in a bull market, you would see the same on the other side. But these downward trending channels can be very strong and easy ways to establish some big gains if you get in at the right point. Perfect entry there for continuation to the downside. Perfect entry there. Perfect entry there. Perfect entry here. All of these could generate you massive profits because normally the downward move is much greater than the up moves when we establish a bear market. All right, hopefully that helps give you guys some type of game plan in order to navigate through this bear market that we're in. Now, with that said, I want to take a look at two particular stocks in general, actually one in general, one sector, and then a particular stock that I'm interested in trading to the downside. Now, we're in an overall bear market, and I think eventually, before this market decides to turn around and establish a new bull market, I think almost every sector is going to have to participate in this downward move. Some sectors have been trying to hold up halfway decent. This is a weekly chart of the XLI, which is the industrial ETF, industrial sector. Some of the stocks within the industrial sector they've trended down, but not as hard as some of these other sectors, such as retail and tech stocks. With that said, I do believe that the XLI is about to become XLI stocks within it about to come into some more pressure, and I mean a lot more pressure. I mean, this is a down. It was as high as 107, got as low as 88. But if you look at some of the moves in retail and the tech sector, those moves have been much more intense than what we've seen in XLI. So with that said, I think there are some stocks that are about to start to see a big shift and start their downward trending channel. Here is a daily chart of Caterpillar, but I'm gonna switch to a weekly chart of Caterpillar. One thing I noticed is that CAT has still been stuck in a range. CAT has been stuck in a range, between 180, around 1, and even though it sounds like a big range, between 180 to 2, what's this level up here? 180 to 230, pretty much. We broke down below this 246, but then we started using this 230 level as an area of resistance. Broke down below 246, rally back up to 230 right here. Drop down to about 180, 190, back up to this level. So we've been in this range, in this very, very tight range for quite a bit now. I do believe this range is about to be broken. That's my personal belief. I think this range is about to be broken. And I think it's about to be broken to the downside. So, so if I was expanding this out, it looks like a perfect range bounding stock. From this high, you've been sneaking within this range quite a bit. I think eventually, like I said, I think, and it may be happening very, very soon. We have the full stochastics that's starting to hinge lower. Winners percentage starting to hinge lower. RSI starting to hinge lower. So I think a lot of these stocks that's within the XLI industrial sector that has not participated in this down move in a big way, like some of the stocks have within the XRT or retail sector and the tech sector. I think the industrial sector is about to start to feel more pain. Look at a monthly chart. You can see how the how Caterpillar has just been holding steady in this range, above this trend line, above the lower trend line. I think that's going to change soon. And if we take a look at the options market, a lot of folks are starting to place some bearish bets. So that is one stock that you can take a look at coming next week as we head into this Fed meeting, which will be taking place on next Wednesday. I think eventually next week we could probably see lower prices in the overall stock market as well. And I think the industrial sector is a place that you can possibly take advantage of a new downtrend. And I think Caterpillar may be one that's about to establish that downtrending channel like we see on the overall market. So I think eventually, instead of doing what it's doing now, I think eventually we are going to see Caterpillar start to do this. So again, instead of going straight across horizontally, I think Caterpillar is about to start a diagonal downward trending channel. So we'll see if that plays out over the next coming weeks, but that is my ultimate belief. So this may be a good time to place a bearish bet. That's Caterpillar. Some others that you can possibly consider taking a look at. Deere, D.R. Horton is another one in that sector. Look at that one. And it's starting. It's just starting. It's starting to start its diagonal trending channel. Deere is one. FedEx is another. FedEx is another. And it's already started pretty much on FedEx. It started its downward trending channel. It was at its high 320 at one point. Lockheed Martin, possibly. Yep. Lockheed Martin. So Lockheed Martin is pretty much trading sideways. So Lockheed Martin is currently trading sideways. I think eventually it too will join the diagonal downward trending channel. We'll move that. So again, I think Lockheed Martin is eventually going to do this. I think that's going to happen eventually. So those are ones that you can pay close attention to, and possibly prepare yourself for a possibly downward trending channel. Yeah, I think these are stocks that are start to join some of these other stocks that are starting to trend downward, like Apple. So Apple has finally broken this trend line that I drew a while ago, and now it's in its downward trending channel. Let's see, who else have I traded recently? So Apple is in its downward trending channel already. Here's one that I've really been on in a big way for quite some time now, HYG. Yeah, I've been on this one since it was up around 90 bucks. Look at that. And that's what most of these stocks are going to end up seeing, folks. Just like HYG has established a longer term downward trending channel. Look at that. I think all these other stocks that I just pointed out is going to end up seeing this. After they have done this for a while, after they establish this horizontal range bound motion for a while, they all end up doing that. So just some things to look at. Wanted to show you guys how to navigate through this bear market and take advantage of these trends, these strong downward trending diagonal channels, to take advantage of maximizing your portfolio's profits. All right, folks, that's all I wanted to share with you guys on this morning, just to give you guys another perspective and another way to look at these markets. Enjoy the rest of your day. Oh, one other thing before I do leave you guys. Also, I've got to point out something on the VIX again. So the VIX can also help you determine when to possibly play the upside, or, play the downside of the market, or to jump into a new position. By looking at the VIX can help you establish when we're possibly ready to see a reversal back to the downside in this bear market. We got a big indication on this past week after the VIX posted many red days in a row. It started to establish some support in this area that I've highlighted for quite a bit, and it's starting to trend higher. Okay, so that is another way to feel more confident in placing a bearish bet when you start to see this VIX ultimately start to trend higher, like we did here and like we're starting to do here. Ultimately, I think the VIX will find a way to break above this upper trend line, and we do that, we'll probably be getting very close to capitulation in this overall market. All right, folks, that's all I had to add. Hopefully you guys enjoy the rest of your weekend, and I will catch you guys next week.